The markets just opened and Opendoor stock is up nearly 78% at the time of this recording. And what is happening with Opendoor Technologies? They're listed on the NASDAQ and they've gone in an extreme rise in the past couple of days. What is happening here? Let's debunk this. So I'm looking at Opendoor right here and we could see that it's almost 79% higher than it was the day before. And it's been an insane ride for Opendoor holders. You've seen a $1 share price all the way to $4. This is an insane rise just in the past 5 days, 5 trading days. And what we're seeing here is really a short squeeze that's happening. And for people that don't know what short squeezes are, a little quick overview right here, AI overview, is it really occurs when there is a very heavily shorted stock and there's a large number of shares that are being borrowed between investors, and essentially shorts or short people that are doing short squeezes are expecting the price of the stock to fall. And a lot of the time investors are really banking that the company either goes bankrupt or they drop immensely in stock price. So this can lead to an unexpected price rising, as you see there's a lot of pressure that's put onto the stock by short sellers. But in order for the shorts to cover, so basically if the stock goes up a little bit, then they're forced to buy back those shares to minimize their losses, which kind of forces the entire stock to go up as a whole. And which is why you see companies with low market capitalizations just increase so heavily when retail is shorting the stock. So you see this cascading event of upward momentum of insane money going into it, and this essentially results in a short squeeze pushing the shares a lot higher. Now this is a very risky strategy. I wouldn't really recommend it to anybody starting to get invested into the markets. This is more of an advanced strategy where you actually have top tier knowledge to do this, and top tier risk mitigation as well, because the losses are technically unlimited. So if you are short squeezing, you could technically lose infinite amounts of money. But let's look at Opendoor's short interest. So essentially, we're looking at how much shares Opendoor has available and what the short interest is going to be. So what proportion of these shares are going to be shorted by short sellers? So we can see that the shares float is 615 million. That's how much shares Opendoor has today. And if you break that down into how much short interest there is, 136 million dollars of short interest is the shares that are being shorted. And if you take this into a percentage, it's 22 shares of short interest or short afloat. So you take that into consideration of a regular company. Let's take Nvidia short interest. You're looking at 1% of the shorts float that are basically being shorted for Nvidia. So you can see that this company is heavily shorted, and people really do not think that this company is going to do well over the span of the next couple of months or not even years. But what's really driving this is retail. So retail, if you look on Reddit, let's go to Wall Street Bets actually. Wall Street Bets, if you go to the best, of the page and you just sort by whatever's trending, this guy just bought more Opendoor stock. You keep scrolling down, there's I'm not meme, it will create meme. This is insane because they have gotten a 400% return on their investment. And this guy only really put in $1,000 or so dollars, and it's turned into 6,000 so far, right? So that's actually incredible. You go down, this guy going open gasm, right? See, this guy's put in, let's see, his gain already is $27,000 on a $48,000 position. People are insanely gaining from the short selling of the stock. So what retail actually likes to do is go against Wall Street, go against short sellers and hedge funds. So everyone is throwing their money into Opendoor. This guy's saying he's gonna hold it until 100x. He's got quite a ways to go. 81% gain so far, and you just keep going down. People are buying the shares insanely. People are buying call options, people are buying the shares alone. And this has resulted in not retail just winning, but Wall Street really losing on the other side. Because remember, when somebody is winning, you are essentially taking money from somebody else and winning, and somebody else is losing on the other side. But let's go to the Opendoor subreddit itself. And this guy really called it out. He goes, why Monday could be big. And we know that Monday's huge because look at this, 70+% again. So the stock had increased quite a little bit. And really, I want to go through this and read some of the statements this guy has to say. So he says that some days it's just a pump overreaction, but he thinks there's good reasons as to why the movement happened. The most important, in his opinion, is this guy Eric Jackson, who nailed the Carvana story last year, and we could see that Carvana last year had the almost same reaction as Opendoor is having today, just through essentially short selling. So basically, there is a change in sentiment that completely brought the attention of Eric Jackson, and not only from the retail side, but probably funds and algorithms too. So it's not just Reddit noise this time. It's more of, other funds in Wall Street also catching along and also joining the movement with retail, which is why we're seeing this nasty move today. So the volume has been insane. It's 10 times higher than any normal day. Do you ever think this kind of move would be from Twitter or Wall Street Bets? No, really, because you have big money coming into here, which is immense. There's a lot of interest building up, and shorts could be in a tricky position. There are still 135 million shares short, which is not GameStop level, but enough to cause pain and keep prices to keep going up. And if Monday starts green, many of them could be forced to cover and push it higher. We know this stock has been pushing higher intraday just because shorts are covering today, which is not a sight you like to see as a short seller at all. So that being said, it's not guaranteed that it will go up on Monday, but we're seeing that it has gone up on Monday. The move has already been huge, and we are yet to see some profits or even a pullback if the market is red, if no new buyers come in. Also, we can ignore that the fundamentals of the company are still weak for now. High risk, low margins, real estate market is tough. So bears are having their argument too. That is also very fair. Another thing is that Opendoor is much bigger as a float than GME or GameStop back in 2021, meaning they have more shares available, so it's not as easy to move the price. Now, the community is not really coordinated either. Everyone is doing their own thing. So maybe we don't get the same crazy squeeze that people expect. Yes, it can go up higher, but maybe not 20x in a few days. Very, very, very true. With a higher market capitalization and higher flow of shares available, it's really hard to move the price that you'd want to in comparison to a extremely small company with a low float. So anyways, he just wanted to post that it's a balanced view. Overall, let's see what Monday does. And you can see that Monday has gone insane. I'm watching the stock just teeter throughout intraday. But realistically, what can happen with Opendoor stock? I think we see the same situation that happened in the past couple of years with any short interest stock within Reddit or any community at all. You see the stock go up immensely in the next couple of days. Just realize in the past couple of days, this company has gone up from $1 to $4 almost. So how much more can it go up? I don't think there's ever a ceiling on how much it can go up, just because that retail and big money is crazy. They will do whatever it takes to bring the stock up, but eventually, I don't know when it will be. Nobody will be able to time it. Eventually, there will be a ceiling where people are just not willing to pay more for the stock, and you will see corrections. You might see it go up, correct a little bit, then go up higher and correct a little bit. But eventually, after these moves like this, you'll probably see a correction in the next 2 or 3 days that just allow the price to come back to reality. But realistically, remember, there's no fundamentals behind Opendoor's technologies. They're not profitable. They've lost money in the past quarter. There's nothing backing this. There's no cash flows that understand at the end of the day, the shareholders are going to get returned something to grow the business, to get money back into their pockets. This is purely just speculation and short interest that people are forced to put their money into here. Not to say that this isn't a good play, I want to say it's a play rather than an investment overall, because at the end of the day, you're not investing into Opendoor as a company. You're investing into the speculation of the shares moving and the short interest that is going to drive the stock higher. So my recommendation is tread lightly with the stock. Of course, there will be millionaires made from this. And of course, there will be people that lose a lot of money from this. You just want to be on the higher end of the stick where you're able to gain money at the end of the day. So be careful, tread lightly, make your money, and make sure that if you guys are in it, you guys have a money standpoint or a price that you're willing to get out at. Because likely you are chasing these wins. You're chasing these wins over and over. But take out your cost basis. Make this position free. If the position is free to you, you don't really care about where the money goes overall, because at the end of the day, you wouldn't have lost money and it's a free bet on the house. So take all that into consideration. This is what's happening with Opendoor stock. I hope you guys had a great day and good luck to all Opendoor shareholders. Peace out.